Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today is your weekly update for July 29th, 2024. I'm going to look at the computers a lot today because there's a lot going on last week, but generalistically, rates are down. The main reason rates are down is data last week looked pretty good, and the 10-year Treasury had a big downward pressure on rates. Data's good, 10-year Treasury down, rates come down. Last week they were up a little bit early in the week, then they went down for the weekend. And we saw rates on VA and Govy low fives through the weekend, and they're currently there now. You'll be able to see it on your email, but let's just jump into rates first, and then we'll jump into data. So right now, government, FHA, VA, 760 FICO or so, you're solidly low fives. Check your email, very, very low fives. Conventional, you're mid to low sixes. In fact, Home Ready just broke fives. Home Ready, Home Possible just broke fives. And that's with that typical discount amount, like 1% or so of discount that you see with most competition. But without, you're low sixes on Home Ready, Home Possible. But anyways, there's a heavy downward trend in rates. We're seeing that. It's just, I don't want to say a heavy downward trend. I just want to say rates downward trending, generalistically speaking, over the last few months. I'll pop open the chart while I'm saying that so you can see that. I do want to compare and contrast the UMBS to the 10-year Treasury. So what I'm going to do, center myself here, 10-year Treasury on the left. This is a one-year chart. UMBS on my right, one-year chart. Now, if you notice, I got to take this UMBS chart and I got to flip it upside down. So that's what you're looking at. UMBS on my right, upside down. Makes it easier to read. But you can see a downward trend on the 10-year Treasury, but you look over at the MBSs and it looks like it keeps hitting the stop point. Well, that's because the coupon rate, and I'll circle it. Again, it's upside down, so it's going to look like it's hieroglyphics or something. But there's a coupon, and the coupon works like this. When a mortgage is sold, and I know some of you know this, but some of you don't. When a mortgage is sold, an investor buys it, and an investor buys it at the coupon rate. The coupon rate's the investor rate of return. So if the rate of return on the coupon is 5% or 5.5%, that's what the investor gets. You're walking in the middle of my video.
Oh, I didn't know you were doing a video. God.
Yeah. Okay. No, I'm not on the phone. All right, so anyways, I'll do that. Anyways, what's going on? So anyways, so the coupon rate is, if it's 5 or 5.5, whatever that coupon rate is, that's what the investor gets paid. But that's not what the borrower actually gets charged. So right now the coupon's 5.5, so the investor gets 5.5. But the borrower might pay 5.7 or 5.8, and the servicer takes the difference. I kind of summarized it, kind of really dumbed it down, but in essence, that's how it works. The math gets a little bit more complicated. The cost or rebate for rate gets a little bit more complicated, but that's the gist of it, right? The coupon rate for that. So we've got 10-year Treasury on my right, coupons on my left. Coupon keeps hitting this bottom part. Why does it do that? Because the next coupon's not available yet. That's why. Now, during the pandemic, we saw coupon rates down in the 2s, 2.0 coupon. In order for MBSs to open up a new coupon, so to go below 5.5 down to the 5% coupon, that's a lot of logistical work. That's way outside the scope of us realtors and lenders, right? So there's nothing we can do there besides wait until a new coupon's open, and then you'll start to see rates jump down a little bit. Now, data this week, you had core PCE come out pretty good. You had jobless claims report came out that looked pretty good. And that was late last week, started pushing rates down. This week, though, the big thing, I'm going to pop it up on the screen here. This week, circle it in yellow. That's going to be the Fed interest rate decision on Wednesday. Now, before the interest rate decision, you typically have some data that comes out. But this week, nothing really is going to happen before it. So we should see a downward trend in rates until the Fed rate decision, actually. Should see it. And then after that, we have jobless claims. Right after that, non-farm payrolls right after that. So again, Fed interest rate on Wednesday. You've got continued claims for jobless claims on Thursday. Non-farm payrolls are going to come out on Friday. So that's really the gist of all of that. Downward trend in rates. We've seen this downward push in rates. for the last 4 or 5 months. Hopefully it continues. If the Fed does not decrease rates for the Fed rate, I don't know what that's going to do for our rates. It might keep everything roughly the same, but everything kind of supply and demand. Remember, mortgage rates are not dictated by the Fed. The Fed is just pressure, up or down, right? Mortgage-backed securities are dictated by the 10-year Treasury, stocks and bonds, mortgage-backed securities. Those are all correlated, right? Anyways, my name is Mike Florin. Have a great week. If rates come out significantly lower after the Fed decision, I'll shoot an update email out so that way everyone can see new rates for the weekend as they come out. Probably Thursday, maybe Friday. We'll see. Anyways, have a great time. Go sell it. Go close deals. I'll talk to you later.